Riveting content. Empowering your life. Welcome to the Sphere. This episode is sponsored by Elite Dental Wellness. At Elite Dental Wellness, Dr. Ashandra Batiste understands that one of the biggest obstacles is dental fear. The vision at Elite Dental Wellness is to ensure every patient is treated with respect, ultimate care, patience, and love. Call us today to make an appointment at area code 713-789-8680. Looking to advertise? Join the Sphere's vast demographic reach of thousands of people all over the world. Send an email today to advertise@thesphere.tv or call us at area code 832-772-7789. KOG and Company. Are your unique gifts and talents changing the world? Do you desire to belong to a community of unity? Visit KOGpassion.com to learn more about the Unleash Your Dopeness movement.
Hello, everyone, and welcome back to the Money Factor here on the Sphere. My name is LaShonda Johnson, certified financial educator, and also the co-founder of the Houston Housewives of Finance. And
good morning. I'm Tony Sanders, also the co-founder of the Houston Housewives of Finance and a licensed financial professional. Welcome back to the Money Factor here on the Sphere TV. We're so excited that you can join us today on another Monday. Monday. Monday Monday. Yes, and it's actually the last day of
July.
Yes. Man, it's going by fast.
Yes, time to make some decisions, you guys. We're already over now. We can officially say that we're over halfway through the year. And man, that's a wake-up call because it seems like we just came into 2017.
Right,
we were just saying Happy New Year. Now we're saying y'all better get y'all stuff together because we're going back to school. So summer is over almost, but the heat is not letting up. It's still letting us know you got until September.
Right.
But you guys, it's time to now look at your financial situation. You know, we've been talking about building your financial house and making sure that your financial foundation is strong and solid. And today we're going to, talk a little bit more about the roof on the house. You know, Tony, when we're talking about the roof on the house, if there's leaks in the roof, man, you do not want that.
Oh,
no.
You have all kind of problems. Absolutely. You have all kind of problems when you have a bad roof.
Yes, things can cave in on you. So that is definitely a place that you want to have solid. Another thing that, happens when your roof has problems, it costs a lot of money to repair that.
Ooh, you better say
I mean, that's a repair that most homeowners do not want to have to deal with.
Right.
It's time, it's expense, and also it's inconvenience. And the same thing when your financial house has been, placed in ruins because your ceiling or your roof, not your ceiling, but your roof was not solid. So today we're going to talk a little bit more about investments. We're going to really get into some understanding of, some definitions of what these things take, what mutual funds are and things like that. And we're also going to we'd love to hear from you. You guys, we're on Facebook Live for 15 minutes, so you can send us a message, give us a shout out. We would definitely appreciate it. We can respond to you. So let's jump into the show, Tony. We're going to start off by going to an article that was posted in CNN Money. How to bank, save, and invest in a socially responsible way.
Wow.
So when you hear the word socially responsible, the first thing I think of when I saw that was, well, it's not the social society's responsibility
absolutely.
to plan for me, but it's none of their business what I do either. So when I saw that, I was like, exactly what does that mean in a sociably responsible way? So let's look at the article and let's check it out.
Let's see what it has to say.
So you work hard to be socially conscious, but what about your money? I mean, excuse me. When I opened that up, I was like, okay, now I get what they're saying. For all of the cruelty-free and what is this? Cruelty-free?
An anti-sweatshop?
Anti-sweatshop organic attention you give your individual purchases day to day. Your money may be paying for causes you don't want to support. So when I thought about that, how can my money be taking care of causes I don't want to support?
We talked about this, really.
We did.
We talked about this. Remember, we talked about this with our producer, because you don't know what they're doing with the dollars.
Absolutely. Yes. We don't know. Tony, pick up from there, please.
Absolutely. Let's see where we are. We say,
do you know where
your money spends the night? I like that. Let me repeat that. It says, do you know where your money spends the night?
Statement. I love
it. Morgan Simon, an impact investor and the author of the forthcoming book, Real Impact, The New Economics of the Social Change. We are stakeholders of banks and institutions, and they are investing money on our behalf. We should know where it's going. We absolutely should. It says, she says, asking the questions like, who owns this bank? How are my deposits invested? And are the key to knowing what your money gets up, and I can't even read this morning. Are the key to knowing what your money gets up to when your bank, what does that say? Save to invest it. So basically, just kind of knowing what's going on with your money.
Yes.
When you're giving your money, where your money is going, and what is it going to work to do for you or for them, and do you support that cause? And
right.
That's really huge.
Exactly.
Because it could be something that you do not support, and you don't even realize it.
Yes, and what's interesting about that is I actually have some clients who are of different cultures, and they asked me that question. So, LaShonda, where exactly are these funds being investing? Because we want to make sure that it is not a conflict of interest with our religion, with what we stand for and our cause. So when people ask you those kind of questions, they're in tune to money. They're conscious, to their finances.
Absolutely, and yes. Conscious about, where exactly it is. Because really, I never really even thought about that until we had that conversation. I'm like, that you're absolutely right. It may be a cause that I'm just totally against it, but my money is
going to support it. Well, that gets into the topic of investing. When you're talking about investing, you get to actually have a say in what you participate in.
Right.
Previous show we talked about that. Just making selections about people that you patronize, companies that you patronize. Absolutely. But now also maybe you don't, but you see that they're hot. Maybe that's something you want to check into. So this is very appropriate for that type of conversation. But know where your money's. I like it. Know where your money slept last night.
I love that.
That's really nice.
Absolutely, that's really
important. So let's go back to the article. It says everyday Americans spend $36 billion as consumers.
Wow,
$36 billion. That's a day. It says every day. Every day, not every year, not every quarter. This is every day. So that's a enormously powerful level to change the way companies act toward the environment and people. And so what I wanted to say about that, because Tony and I both are independent licensed professionals. What does that mean? Well, we don't represent one company. We represent a multitude of companies. Well, really, we represent you as the consumer, but we can help you with a solution with multiple companies. Why is that a benefit to you as a consumer? Because you're not just stuck into one company's products, and this makes the space pretty competitive.
Absolutely.
So if I represent multiple brands, then they're going to compete with each other to bring you as the consumer the best.
And so the options are there and available. And I tell people all the time, you'd like to have options.
Yes.
Don't just stick me in one thing and saying, okay, this will suit everybody, because it doesn't fit.
No.
It does not fit.
Like they say, if it don't fit, you must have quit.
Or I'm thinking, if it don't fit, don't force it.
Yeah, that's
don't
even better.
Force it to fit. It's not going to fit.
That's even better. But you as a consumer need to be educated in order to understand whether or not these are appropriate choices for you. Get involved with your money. So you cannot, not only do you need to know where your money slept last night, but you need to know who it slept with.
All right.
That is so very, very important. And education is going to be the driver of that. It's not going to be just that, I heard about this or I heard about that. Get involved.
Right.
Read, listen, learn. I like one of the posts that we did last week. Stop, listen, and learn. Don't be too busy to have involvement in your money.
Right.
You got to know what you have, what you owe, what you're earning, and where it's going.
Absolutely.
And let me say that again. You got to know what you have, what you owe, where you're, what you're earning, and where it's going.
where it's
You have
going.
to know that. So let's go back to the article, Tony.
It says, here are 3 ways to do an impact check on your money and ensure your financial institutions and investments are aligned with your personal values. That's exactly what we're saying here. It says, should you break up with your bank? Let's see. When you put your money in a bank, it isn't just sitting in the back of the vault. It is being loaned out. And for many,
Oh my gosh.
yeah, right. And for many big banks, that means that they are lending the money in a way that is dangerous for the planet.
Yes. You know,
Let's just go there for 1 second. So if you think that you're just making that deposit and your money's just sitting there, wrong.
no, we've said that many
It's
times.
not
Your
just
money is
sitting
active.
there.
It's actively working. That's why banks love for you to do direct deposits.
Absolutely.
Because they can count on a certain amount of funds coming in at a certain amount of time for the money to get a certain amount of interest and to do a certain amount of investing. So if they're going to be that savvy with your money, why wouldn't you?
Why wouldn't you?
Why wouldn't you? So that's a good question you can ask yourself. No, like I said, gone are the days where we can be complacent about our dollars. We have to know what's going on with our money. And we have
Absolutely.
to get involved. We have to be active. We cannot just be passive savers.
Yeah.
We've got to be active. Get involved. Understand what's going on around you. Understand the possibilities that exist in front of you and behind you, on the side of you, because your future matters.
Yeah, yeah.
It
You know,
does.
it just makes me think about all the causes that people, have and things that they stand up and they literally fight for. But you don't even know if your money.
Which goes back to the phrase in the Saving Your Future book, we don't know what we don't know.
We don't know what we don't know.
So what is the root of all of this, you guys? You got to get educated. And so speaking of education, it's time for the portion of the show for our first sponsor, which is Elite Dental Wellness. And so Elite Dental Wellness is their vision is to create a welcoming practice that will offer exceptional dental care and a lifetime of dental wellness. We're committed to the finest possible oral care and the overall health and well-being of our patients. Elite Dental Wellness is built upon a foundation of integrity, expertise, and service. Through our commitment to modern dentistry, continuing education, and friendly atmosphere, we strive to make our patients feel that they are a part of our family. Dentistry can be scary, daunting, and uncomfortable. Dr. Batiste and her team work tirelessly to ensure your comfort. Make your appointment today with Dr. Ashandra Batiste at Elite Dental Wellness at 713-789-8680. Bing! Love it, love it, love it. Okay, so getting back to the bright side of things.
All right now.
I know. I'm on a roll today. I had a fabulous weekend in Dallas. And, Tony was out there with me as well. I mean, we've been apart a lot, doing this, as our mission, as we're fighting for our mission to make sure that we educate you, your family, and grow, help you guys to grow. It's more time that we're apart than we're together because
Right.
we have to divide and conquer. But we had an incredible weekend in Dallas, making sure that we fill up our tanks with the things that we need to make sure that we're equipped to be able to educate the community and show them the importance of being their own money manager. And this
Absolutely.
article is definitely appropriate
This is
for that
very
cause.
appropriate. Mhm.
Yes. Cannot just be passive. You got to be active. Okay. So let's go back to the article. So, Tony?
It says, sure, you've heard of all the big banks, but all across the country, there are other banks and credit unions that may find are more aligned with your values. For example, there are San Francisco-based New Resource Bank, which serves value-driven businesses and nonprofits. There's also Aspirations Summit Bank account or Beneficial State Bank, a community development bank. These institutions are FDIC insured, just like the big banks, but provide greater transparency in how your deposits are used. I like that. So you can know exactly where your dollars are going. And I like the fact that, if you're a sort of value driven, or if you're a nonprofit, there's
banks for you,
specific for you,
specifically
for your business.
That
Absolutely.
used to be something that wasn't heard of. You know, being able to ask your bank questions.
But where's the money?
Yes.
Show me the money.
Or, you know, I don't even remember an era of time where it was comfortable to do that. Everybody just automatically trusts the bank.
But you know what, I like, because remember at the beginning of the article, it says that we are socially conscious. And so people are wanting to know those things.
Right.
You think about all the rallies, you think about all the things that people support and what they stand for. So they want to make sure that, you know, their dollars aren't going to support that. So I can see that this is huge.
So that's where the word socially is not what I thought when I saw it.
Right.
I thought it was, you know, we say a lot, you know, we're trying to keep up with people, you know, spending money we don't have with things that we don't need to impress people we don't like. So when I saw the word socially, we can always kind of misconstrue it towards something like that. But no, this is talking about in our social environment, which is totally different.
Totally different.
Yes, totally
The things
different.
that you stand for, the things that, you know, are near and dear to you, that you don't want anybody or anything to, you know, come in between that, even the dollars, you know.
Yes.
If you, you know, I hate to say it, but it brings me up to the point, you know, how people are so passionate about PETA.
Oh, yeah.
And they would never, ever give to an organization who support it.
And you don't even know. Even so much as that, pharmaceuticals and things of that nature. You guys, it's time to go to the Sphere right now, this moment, and subscribe, because, you know, First Book Live is only a 15-minute session, and we're going to continue with the show. But to watch the show in its entirety, you do need to be a subscriber. So do subscribe. Go to Facebook. Go to the Sphere on Facebook or thesphere.tv and subscribe. While you're there, we'd like for you to leave a message through a review. Tell us what you think, what you'd like to see, what you'd like to hear. You can also donate. There's one button there you can push for a one-time donation. We bring this show to you free of charge, of course. If you appreciate our cause and you want to help us to continue, you can donate. You can also become a patron that consistently donates. Either one, we appreciate it. We really greatly would appreciate your support. And in addition to that, we want you to be able to share the show. In order for us to reach the masses everywhere, we need you to be able to share the show and share what you're learning from the show. So let's go back to the article. This is a pretty powerful article. I like it, and the reason I could connect with it is because it's so in line with what we're trying to help people to do. Yes, our cause and our mission. And so it says, what is your savings and spending? What is your savings and spending funding? You know, in a low interest rate environment, you're not earning much on your savings. I don't know what else we have to say. We're going to have to make a shirt out of that. We've said that many, many times.
Right.
Simon suggests you can get better returns and put your money to better use by placing savings in the social impact portfolios, which could earn you 1 to 4%, depending on the term. But you have to understand these things, because if you're a person that doesn't understand these things, this is going to go way over your head.
Right.
You're going to be like, what does that mean? Where do I get that at? Well, you're on the right track by asking those questions. But now you need to,
and being here on the Sphere.
And exactly. That's exactly why you're here. So you can learn those things.
Right.
Okay. But you guys, there's only so much you can learn watching. You've got to schedule an appointment for a personal financial strategy. You've got that's the active part of you getting involved in your finances. And getting involved in your finances means that I'm going to participate in some education. Whatever you want to attain as far as your finances is concerned, get educated about the topic, which leads to a very great topic. Our workshops that are taking place Tuesday night. So you have a chance to come out tomorrow. We're actually going to be starting with increasing cash flow and debt management tomorrow.
Yes.
That is the workshop tomorrow at 2500 East TC Jester, Suite 345. That's Houston, Texas, 77008. I don't have to mention how important it is for you to understand how to increase your cash flow. That opens up ways for you to work on that roof, which is investing. It opens up opportunities for you to be able to pay off your debt, which is the second tier on building your house. So Tuesdays, 7 p.m., Saturdays, 10 a.m.
Awesome.
All right. So let's go back to the article. Now, it also says, let's skip down. While the portfolio It's not FDIC insured. They're talking about a portfolio right above. I'm just kind of skipping around because we have a lot to cover today. Institutions they have levels of protection on its investments, and it's a 22-year history that has paid back 100% of its investors on principal and investing. So something like that, you want to know exactly what the heck is that, and do I have an opportunity to get in? So again, doing some research. You got to get involved in some research. Going back to the article, right below there, it says, are you investing ethically? As a conscious consumer, you make social responsible choices for people and the planet with your purchases. But when you find out your mutual fund is that you're investing in a fiscal year, all of your efforts may feel what is that? For naught. Okay. So at the very least, check with your mutual fund company to see if there's a social impact option like Vanguard's social index fund or Fidelity's. So if you want to take the next step, you can invest with an investment firm with a socially responsible emphasis, like they're naming a few. Betterment is one that we use.
Absolutely.
Betterment is a good one. I mean, I even use Betterment. Okay. So again, you get to get involved here. This is an area pumped and primed for young people, millennials. So millennials, I like that they can get into the financial realm with a better understanding than we did.
Absolutely.
We fell in the doggone water. We didn't know what was going on.
And so they're definitely ahead of the game when it comes to the education, and that's really going to help them in the long run.
Yes, these kind of conversations were not being had.
No, not
back
at all.
At when I was 25 and 30.
No.
Definitely not.
No, not at all.
It was actually almost taboo. And it was,
They didn't talk about it.
only a select few if you didn't understand the conversation, you quietly excused yourself from the circle.
Absolutely.
And went over to something else that you understood. But now that's not the case. So millennials, yes, scary for you. Your future is daunting, but you have the tools to equip yourself to, not be a statistic.
Absolutely.
Yes.
The resources are definitely available for you, so take advantage of those.
Yes. Okay. Is that it on the article? Okay. So we're going to go over to the Saving Your Future book. You don't have this book, you need to contact us at 1-844-700-4463 to get a copy. 67th episode. 68th? 68th episode. You don't have this book. Shame on you.
Yes.
Okay. It's a foundation, you guys. It will expose what you should do, or not what you should do, but it will expose what these things mean, which gives you a better understanding, so it can help you to make some better informed decisions.
Absolutely. The foundation of it all.
Yes, the foundation. And then you can now say, oh my gosh, okay, and now I clearly understand this. So now when I go to participate in it, at least I have the basic knowledge of what it is.
Right.
Okay. So let's go to the Saving Your Future book. We're going to start on page 52, and we're going to talk about the market index. Tony.
It says, every time you turn on the TV or you log onto the internet, you'll often see the Dow Jones or the S&P 500. These are stock market indexes. An index is a statistical indicator used to measure and report the change in the market value of a group's stocks. The rising and falling of those numbers are on any given day provide you an idea of how the index is performing and what the market is doing in general. Keep in mind, however, the market indexes are unmanaged, and it is not possible to invest directly into an index.
Okay, you got to know that. So there's a lot of buzz out there now about index funds. Warren Buffett is a true advocate of them. But again, you got to understand how they work. So you got to sit down with a professional. I think we're in a portion of the show for our next sponsor.
So this portion of the show is being sponsored by the Sphere, none other than. Are you starting a business and looking for a place to advertise? Or do you have a reach of out for thousands of people across the world to build your brand or sell your product? If so, get your product and placement advertising needs handled right here at the Sphere. We offer a wide variety of content delivering platforms, including iTunes, Google Play, SoundCloud, YouTube, and Stitcher. Plus, we have a vast demographic reach within the United States, as well as modern countries across the globe. Our enriched content and inspiring dialogue, coupled with strategic ad, is surely to hit the mark each and every time. Call us today at 832-772-7789 or send an email over to advertise@thespheretv.com. Well, let me do that again. Advertise at thesphere.tv. But hey, you know how to get in touch with the Sphere. Contact us. You want to be advertising on the show? We're definitely, we're expanding our platform.
Oh my gosh, you guys! You better.
Yes.
Hey, it's some serious things about to take off with the Sphere. You want to be in the place with the Sphere because, man, and we're not talking about a long time. We're talking about in the next 45 days. It's going to be some incredible things happening. And if you're not on board,
hey, you want to be with the podcasters of all podcasters, you definitely want to be on the Sphere Network. So
absolutely.
Contact us.
Absolutely. Okay. So let's go back to the Saving Your Future book. And it talks about the Dow. The Dow Jones Industrial Average, that's DJIA. Is that an I?
That's an I.
My eyes be playing tricks on me, y'all. It is the most well-known index in the world. You guys hear talk about the Dow all the time. Dow Jones, Dow Jones, Dow Jones. The Dow measures 30 powerful companies in America. Now, tying in the article that we just talked about, are you contributing in some of those 30 companies? Did your dollar sleep with one of these 30 companies last night? Is the question you want to ask.
I like that. Which one did you sleep with?
Which one did your dollar sleep with last night? So, you got to know which one of those, which 30 companies those are. So let's go back to the book. It doesn't list all 30 companies, but it gives you an idea. Most people consider it the barometer of the U.S. stock market. However, it does not reflect smaller size companies. So if you're a little player, you're not going to be in this list. Look at the people who are here: American Express, 3M, AT&T, Boeing, Chevron, Cisco, Coca-Cola, Walt Disney, McDonald's, JP Morgan Chase, Johnson & Johnson, Home Depot. I don't see Lowe's. Okay. IBM, Intel, Exxon, Microsoft, You guys, look at this. Pfizer, Verizon, Visa, Walmart.
All companies that we all know and use.
So if you're looking for a big return, I would say I would want my money to be sleeping with one of these.
Yes.
Okay, so let's go on in the Saving Your Future book. Tony, S&P 500.
Absolutely. It's talking about the S&P 500, which is Standard & Poor's 500, is the indicator of 500 large companies and covers 70% of their entire U.S. equity value. These companies represent all major sectors of the U.S. economy, from manufacturing to financials, healthcare, tech, energy, retail, and pharmaceuticals. Thus, it better reflects the U.S. market than the Dow, and it's more frequently quoted by financial experts.
Yes.
It's funny because I love that we're giving the simple education here.
Very simple.
Because this book is why people need it, because I tell you, and I know this happens to you as well, but when I go out and I talk to clients, I'm educating them at the same time. And I ask them if they know what it is, and they don't. It's things like this that you need to know.
Yes. What's the difference between the Dow and the S&P? There is a difference.
There is a difference.
And so if you understand the difference, then you know, again, where to lay your money. So let's go back to the Saving Your Future book.
I like sleeping with the big players.
I do too. Our producer is shaking his head. Like, what exactly? Now, let's talk about the NASDAQ. The NASDAQ Composite Index lists the stocks of over 4,000 companies in the markets. It's heavily weighted towards technology. This is our producer's backyard.
Yeah, this is his backyard.
Yes, stocks, well-known names like Apple, Google, Microsoft, Cisco, Intel, Tesla, Netflix, and Amazon. That's not going to be with your S&P. That's not going to be with your Dow. That's going to be on your NASDAQ. So you have to understand it. Outside the U.S., indexes track the stocks of big companies throughout the world, such as the Hang Seng, which we're very familiar with, Hong Kong Euro Stock 50. So you have to know how to get into global markets.
Absolutely.
Yes. So it increases your chance of returns. The world is getting smaller. These indices are highly observed and have global impact, affecting not only companies but economically overall. So again, NASDAQ, got to know what that is. Technology is big,
Right.
and most people, technology is one thing that you can count on to continue to be moving.
Oh, it's always growing.
It's not going to stay the same. People in that field, like our producer, man, he already knows about stuff that's coming out that we have no clue.
Never even heard of. Right.
I remember having a conversation with somebody. I can't believe who it is. It's like, yeah, you guys are excited about iPhone 7, but Apple is already on like 10 or 11.
Absolutely.
And so just because we don't have it yet doesn't mean that they cannot be just working on something right now. They're working on way ahead. Technology is a big deal.
Right.
And so to be involved in it, yes. If you're a techie person, if you're not, you need to become one. Like me, I need to become one because there's a lot to be said there. So let's go back to the Saving Your Future book.
Says the money market. It is a market for short-term, low-risk securities such as the U.S. Treasury bill, bank CDs, and commercial paper. Other debt issues by corporations or governments. Money market accounts, the MMA, are offered through banks or credit unions. It generally gives better return than savings account and provides easy access to money when you need it. But it tends to require a higher deposit and amount to participate. MMAs are different than money market funds, which are mutual funds with money market portfolios.
Got to know the difference.
Have to know the difference.
And the keywords back there, low interest. So you got to know what you're looking for. So if you're looking for high interest, then you have to understand these things so you know where not to put your money. So if you're expecting a higher return, and this is also short term, you got to know. So most of us need to make sure we understand what's our short-term goals and also what our long-term goals. Your short-term goals, then yes, you can look at some short-term solutions. Long-term goals, they're going to provide you a better return.
Absolutely.
So of course, you need to understand the difference between the two. So let's go back to the Saving Your Future book. Mutual funds. When you invest for the long term, here we're talking about long term. That's key. Long term. You must find investment vehicles that have the potential to grow, to duplicate inflation, and achieve your purpose. I love that. Your purpose, not the economy's purpose. I'm not trying to achieve Tony's purpose.
Right.
I'm trying to achieve my purpose. Historically, the stock market over the long run performs better.
God bless you.
Performs better than conservative vehicles like T-bills, bank CDs, GICs, or government bonds. So you have to understand the difference between mutually participating in a company and also them extending you money, or you extending them money on a loan. They are indebted to you. So you have to understand the difference between the two. So going back to the book, again, you guys, having this book allows you to now go over it on your own.
Absolutely.
Read this for clear understanding, because in 45 minutes on this show, we can't do that. But we do want to give you a basis of understanding so that you can now at least have a source to go and dig a little bit deeper.
And that's all we're trying to do, is to be that resource for people to at least get the basic education. Because right now where we stand is, man, people just don't know this information, but they're making decisions and they don't know. They don't have it.
And some people have information in bits and pieces. I've seen that a lot in my career, where people have things in bits and pieces. They knew this, but they didn't know that. And so again, you need the whole thing. You got to have the whole thing. And a good example of that, Tony, and I'm sure you probably experienced this too, is people who participate in their 401k. How many times have you had somebody come to you that participate in a 401k?
They don't understand how it works.
And they would say, these are the words that I hear is, well, I want to get into investing. And the first thing I ask them is, do you have a 401k?
You are investing.
Yeah, you are investing. I want to do a mutual fund. Do you have a 401k? You're in a mutual fund. Or how is your 401k distributed?
Right.
What's your risk tolerance? What are the funds that are you looking at your statement? Because your 401k statement will show you the funds. It breaks the funds down, their performance. It breaks down the losses, the gains. It breaks down all these things. But how many times do we open them? And a lots of times, and I was guilty of that. I'll be the first to admit that
I see that more times than I would like to. Is I see clients, if you participate in a 401k or any retirement vehicle and they send you something, please open it up. You need to know where you are.
Yeah.
You must know where you are. If you don't understand how to read your statement, again, you can reach out to us. I'm Tony S. at HoustonHousewivesOfFinance.com.
And I'm LaShonda J. at HoustonHousewivesOfFinance.com.
You can also reach us at 1-844-700-4463. I think it's just so important for you all to understand exactly what you have. If not, you just have a statement. And have you ever been to someone's house and they have just mail piled up that they've never opened? And you don't know what's in there.
Well, I'll go you one better. My clients show up to their appointments with their statements and they've never been opened. They start opening them in front of me. I mean, they've got like 10, 12 statements from years back. And I'm like, well, I need the current run. Well, let me keep opening. I don't know which one is current. Wow. Okay, you don't know what's going on with your money.
You don't know what's going on.
You don't
know
where your money is sleeping, walking, talking.
Right.
You don't know. I mean, you don't know.
Or if your money left you.
Exactly. So, and you guys too. We know to become a millionaire, you need to have multiple streams of income. When it comes to making your money work for you, you need to have money coming from multiple streams. And when we talk about the topic of investing, it is not just one place. Some people say, well, I have this one thing. Right. No, I mean, you need to have diversity, and you need to make sure that you have money coming from different places, because when one thing doesn't do what you need it to do, the other one can make the difference. So you need to have a balance, and we're going to talk about that in the book. It talks about, being able to dollar cost averaging. So we're going to get into that too. So let's go back to the book, how mutual funds work. Let's say you have $100 and you want to invest. The small amount of money may only allow you to buy one share and one company stock, and the risk and reward of one stock is high. I mean, if you have $1,000 and you put $100 into 10 different stocks, you're starting to spread your risk out. Well, we were just saying just now. Okay. Now consider if you have 1,000 people like you who are also investing $1,000. Then together you have $1 million. This large sum will greatly expand your investment choices.
Right.
That's what mutual means. A mutual fund is a pool of money from investors. Each fund has a specific mandate or purpose, and a professional fund manager who invests the money based on the specific strategy and goal of the fund. So that's where the professional environment comes in, because you can't just do mutual funds just on your own. You have to have some even though you're participating in your 401k, somebody's managing
it. So with that being said, it brings us to our last portion of the show, being sponsored by KOG and Company. Are your unique gifts and talents changing the world? Unleash Your Dopeness is a people empowerment movement built to encourage the masses to operate outside of their fears and have the gall to recklessly pursue their dreams and passions in life. Join the thousands of others as we unlock the greatness and dwells within us. Shop dope gear at KOGpassion.com. That's KOGpassion.com, and use the coupon DOPE for 10% off exclusive Unleash Your Dopeness apparel. Act now. Sizes are selling out fast. And I just love this, and I'm not going to stop saying it until we connect with KG.
Yes,
KG, if you are listening, hey,
can you please make that phone call today?
Yes, we're going to do, we got to set something up.
We were able to do something with her initially when she started the MIT.
Yes.
And actually, that's our exposure to Gary is through KOG. So we're very grateful for that, and we want to do future partnerships. So you guys stay tuned for that. Let's go back to the Saving Your Future book. So we just gave a good plug for KOG.
Love you, KG.
Okay. Yes. Types of mutual funds, Tony.
It says, when it comes to mutual funds, investors have thousands of choices. The important thing is that you must know the risk and the investment purpose of each fund to make a proper decision. In general, mutual funds fall into one of the four categories. Number one is your money market funds are considered relatively low risk. Number two is the bond funds. They buy different government and corporate bonds. Number three is stock funds, buy shares in companies. Number four is balance funds, hold a mix of stocks and bonds. So this is definitely something that you definitely want to know when dealing with your mutual funds. It says stocks are quite popular, offering a wide range of funds which can be identified by 4 main categories. Growth funds focus more on capital appreciation. Value funds focus more on stocks that are deemed to be undervalued in price and likely to pay regular dividends. Index funds aim to achieve returns similar to particular index such as the S&P 500. And the sector funds focus on particular industries, segments such as biotech, energy, real estate, and emerging markets, etc.
So knowing, I mean, this all really, really gels, because that article we talked about first talks about knowing where you socially stand. When you identify that, then you can make the right choices with your investing.
Absolutely.
And so then this gives you a breakdown. You see why it's important to have this book, because really when you go to a brokerage firm, they don't have time to tell you that.
They're not going to tell you that.
They don't have time. They're not going to take time. But again, this is where this blue book and our workshops come in, because this is where we provide you that information. You take that information and you go and you become active. You become a doer, and then now you identify your needs. You identify your goals, and then you now have a purposeful method to your investing.
Absolutely.
Which is very, very important. Okay, so let's go back to the book. Buying and selling mutual fund shares. So the NAV, that is net asset value. So now you see these things all the time. You hear it if you're a CNN follower, if you're a Yahoo Money follower, you hear these acronyms and you don't know what they mean. You need to know what they mean.
Absolutely.
I can remember having conversations with people and I was like, yeah. No.
They didn't.
I did not understand what they meant until I, tipped into the industry. And so going back to what the NAV means, NAV, net asset value, is similar to the stock price of a company. NAV measures the value of one share of the fund. So basically that gives you a formula right there. The NAV equals the assets minus liabilities and the outstanding shares. So there is a rhyme and reason to this, you guys. It's not just thrown up here. This is a highly regulated industry. So there is a rhyme and reason. It gives you an example there. Fund XYZ has 1 million shares. At the end of the trading day, it has 15 million worth of securities, 2 million in cash, and 1 million in liabilities. So that's going to determine the value. And you make note of at the end of the trading day. So these things, that's why we say the market is active. It's active. Things is working right now. So your money is working right now. You might be still, but your money is not sitting still, depending on where you have it. Unless you have it in your cookie jar or under your mattress, then no, nothing's working for you. But the dust and the bed bugs. But if it is in the market, it is very, very active. Okay, so let's go back to the book. Mutual fund fees and expenses, load or no load. Okay, what does that exactly mean? So as with any business, running a mutual fund involves cost. Okay, you guys. So when you get into the market and when you get into investing, you have to understand these things have costs associated with them. Funds pass along these costs to investors by charging them fees and expenses. So you have to understand this is why you as an investor pay fees, and you have to pay the fund managers because it involves costs. Fees and expenses vary from fund to fund. The fund with high costs must perform better than low-cost funds to generate the same return for you. Investors should always read the fund fact to see what the objectives of the fund are, its risk profile, and the fees and expenses it charges, so you understand you're not walking in blind. The fund's simplified prospectus also contains information about risk, fees, and charges. So if you're going to get into investing, you're going to need to read your prospectus. Typically, they're very intimidating, and most people say, all it is, well, if you want to be active, if you want to understand. So in the U.S., the Securities and Exchange Commission, that's the SEC, guys, requires funds to disclose these fees and charges, as well as information about the mutual fund's objectives, risk, and performance in the prospectus. So that has to be laid out to you so you'll know what you're getting into, because you are going to carry the risk. Okay. And so that's par for the course. You have to know that, but they want you to know what you're getting involved in.
You see that perspective, you get a little scared.
But hey, it's still it still has to be given to you by law. So you can't say, "Oh, I didn't know. Wow, I got into something I had no clue what I was getting into."
Right.
You can't say that. So investing in something that you do have to be actively involved in. It's not a passive thing. You can't say, "Here's my money." No, it's like, I got to give you this. You got to sign this. You have to say you understand this. You know, all of these things take place. So let's go back to the blue book. Okay, mutual fund charges include, but are not limited to, front load, back end load, purchase fees, redemption fee, exchange fees, and account fees, plus annual operation expense such as management fees, distribution/service fees, and that's we call that a 12B-1 fees, and other expenses. So you could be subject to some, all, or multiple. So you don't know.
Right.
Ask questions. So, Tony, a word about no-load funds.
Absolutely. Some funds call themselves no-load. As the name implies, this means that the funds do not charge any type of sales load. But as discussed above, not every type of shareholder fee is a sales load. A no-load fund may charge fees that are not sales load, such as a purchase fee, redemption fee, exchange fee, and account fee. No-load funds will also have operating expenses. Make sure you review the fee table on the fund that you're considering, including no-load funds, to be aware of these charges. And we talk about it all the time. Know what your fee is. Nobody's managing the money for free.
It's going to impact your return.
It's going to impact you.
So people who are investment savvy or expect to become investment savvy, they have to know what portion of their funds are going to go towards satisfying fees. They also understand that they're going to pay some fees.
Absolutely.
And most of them are seeking the lowest amount of fees to pay, which makes sense because you're trying to win in the money game. Yes.
Absolutely.
And so again, just awareness, education. Please, you guys, I can't impress upon you how important it is to have this book, come to the workshops, and get educated, and then become active, planning for your future and participating in things that are for your purpose and for your goals in life. So let's go back to the Saving Your Future book. Okay. The advantage of mutual funds: professional management. That's number one. That's the first thing listed here. Money managers provide investment expertise in researching, selecting, and monitoring the performance of the securities purchases. So, yeah, because are you going to do it all day? Most of us have a job.
No.
You're not going to sit there and watch that. Diversification lowers your risk by not putting all your eggs in one basket, which we just talked about. The money will be spread amongst different stocks, bonds, and other assets. Okay. Liquidity. You can get in or out quite easily. So liquidity is important for things that you need to do in the short term.
Absolutely.
And I don't know anybody that doesn't need to have some form of liquidity.
Something. Yes.
I don't want to have all my money tied up someplace where I can't get access to it. Yes, we encourage you to have a amount of 3 to 6 months of emergency fund in a bank. But again, banks don't give you interest. So I would suggest that, think about through education, think about other places that you can store your emergency money so it can work for you too. Even though you're not supposed to touch it, doesn't mean that it shouldn't work for you. Yes. Right. Okay, so let's go back to the book. Low investment minimums. Some funds can let you start investing with as low as $50 a month. So
I've even seen it lower than that.
I mean, you guys, this means that there's no excuse for not building the roof on your house.
Right.
There's no excuse. Because we know with $50, we have $50.
Right.
Most of us need to be at least paying ourselves $10 a day. That's $300
a month.
And you can distribute that evenly to make sure that you have the proper things in place. But I love that what you said, Tony. That doesn't mean you don't give yourself a raise. You might start there, but that's not where you stay.
Right.
You have to give yourself an increase.
You always want to be increasing your savings and not your lifestyle.
Yes. So if you're paying yourself $300 a month now, you're looking out for how soon can I start paying myself $400, $500, $600, $700. Right. You're going to be able to reach your goals faster. And then if you're in a place that gives you compound interest, man, the opportunity exists there. The more money you put in, compounding interest is working better for you. So you need to understand that as well. So let's go back to the book. And the last one, it says here, ease and convenience. It's easy to set up pre-authorized checking, that's what we call a PAC, programs for ongoing purchases and dollar cost averaging. Okay, so link it to your accounts. We have technology now that you can link things to your bank,
Right.
and at your phone.
It's on your. I was gonna say
You
the same
can-
thing. It's so convenient because it's right on the
Yes,
phone.
you can control it at your
Right.
phone. What you want it invested in, your risk tolerance. You know, if you want to sway one way or sway the other, it's so many things available to you. So remember, we're becoming, we're in a socially conscious environment now, and so everybody's about convenience. So managing your money is going to also be in that category. Okay, going back to the book, Tony.
It says the disadvantages. The professionals can be wrong. There are no guarantees. You can lose money, and fees and expenses reduce your return, which we just said. How can you make money with mutual funds? There are 3 ways you can make money with mutual funds. Number 1, income returns to the funds from the stock dividend and the bond interest. 2 is capital gains and distribution. The price of the securities as a fund owns may increase when a fund sells them. In which this case, a capital gain, the gains will be distributed back to the investors. 3, and is the increased NAV. Investors make money by selling mutual fund units at a price higher than you bought them for.
Yes. Well, I mean, what I have to say about that is everybody's got to make money.
Everybody's got to make money.
You know, hey, if it's got to be something in it for all parties involved. You, the company is, you know, hey, they're saying, listen, if a bunch of people invest in us, then we can grow. We can do the things necessary for us to grow.
If it doesn't make money, it doesn't make sense.
And that goes all the way around.
All the way around.
You know, everybody's got to win. The question is, are you winning? Do you understand what's happening with your money? Are you winning?
Right.
Because I can guarantee you that the person on the other end is making sure that they're winning. You got to make sure that you're winning.
I love that.
Yes. So let's go back to the book. Exchange traded funds. These are called ETFs, you guys. So you hear the term ETFs, exchange traded funds. An exchange traded fund is an investment fund traded on stock exchanges. Much like stocks, ETFs hold assets such as stocks, commodities, or bonds, and fluctuates over the course of the trading day. So it could go up and down throughout the day.
Right.
Most of us have a job. We don't have time to watch that. Okay. But at least you now know what an ETF is. Okay. So let's go back to the book. And if you have that or not, you need to check. What do you know? Where's your money sleeping? Remember? Now, variable life, variable universal life, variable annuities. Anytime you hear the word variable, it means the results will vary. Over the last several decades, the insurance industry has incorporated investing vehicles into their insurance products. By combining investments with insurance, clients may be able to capitalize on the potential growth of the market while also benefiting from the tax advantages of life insurance and annuities. So if this is not a part of your portfolio, you should consider it because of what? Tax advantages. Anytime you hear the word tax advantages,
hello.
you have my attention. These products offer many investment choices managed by professional managers in mutual fund-like portfolios. However, due to the nature of capital markets, the potential gain can be offset by potential loss. You can lose here too. So the policy owners should understand their objectives and their risk tolerance in purchasing these products. Here are some products that have gained popularity in the past several decades. Okay, variable life and variable universal life. Okay, we're going to go on for sake of time. Also, the policy owner is responsible for the investment of this account. You can put this extra cash into different investment options. Therefore, if your underlying investment performs well, then your death benefit and your cash value may increase accordingly. If your investment performs worse, then you can expect your death benefit and cash value may decrease. So these things, you take risks just like you do getting into the market. Variable universal life is very similar to variable life. Expect that you have flexibility on the premium and death benefit. In Canada, universal life policies offer both interest-bearing accounts as well as different investment options for various money management funds. Thus, up north, the variable life name is unnecessary. Okay, so different places have different rules, and read the disclaimers in here so you can understand. Variable annuity: when you put money into fixed annuities, the insurance company will give you a fixed rate of return. With variable annuities, the policy owner is responsible to choose different investment options for their money. Thus, your rate of return depends on the performance of your investment. So you have to understand investing. So the overriding message here, you guys, you got to understand.
You have to understand.
You have to understand what you're getting in. Yes, there's some risk involved in the things that are variable, and also when you get in the market, but there's safety things as well. So what do you want? That's the question. What do you want? What's your goals? How fast do you want to get there? What amount do you need liquid? What's short term? What's long term? This is why you have to call us at 1-844-700-4463. You can reach out to us on info@HoustonHousewivesOfFinance.com. You can reach me at LaShonda J at HoustonHousewivesOfFinance.com.
And I'm Tony S at HoustonHousewivesOfFinance.com. You can also reach us on LinkedIn. We're on Instagram. We're on Meetup. We're on Twitter. We're also on Facebook as the Houston Housewives of Finance
Official.
If it doesn't say official,
It's not us.
So you make sure that you get in contact with us, because this has been a lot of information.
Yes.
And people really need help.
They really do. And there's a lot more. I mean, it looks like we're going to have maybe one more because we didn't get into some of the other things. And we want to make sure that we equip you guys with at least the basic knowledge. But again, you need the book. Get the blue book, because then now you can go back, read this information on your own, gain your own convictions about it, write down your own questions, start digging into your finances. We encourage you to be active when it comes to your money. Where did your money sleep last night? Where is it going to sleep tonight? Where is it walking around? What are you participating in? What are you endorsing with your dollars? What are you endorsing with your dollars? You need to know that. So make sure you tune into us next week here on The Sphere and The Money Factor.
Same time, same place.
Same time, same place.
Well, actually, no.
Oh, no, not the same time.
Yes.
Next week, 10 a.m. We're going to 10 a.m. But, just follow us on Facebook, because we'll let you guys know what time to tune in. But please make sure you go subscribe so you can watch this show in its entirety. Share this show. Write a review. Donate. Help us in helping you. We'll see you next time. Bye-bye.